shiny object syndrome for our purposes during this session is going to be, I go down a path and then I see something over there and it looks like it's going to be great. And then I see something over there and that looks like a really great opportunity. And all of a sudden we're spread too thin because we're trying to chase after so many different things that are all super appealing and exciting to us. So that's going to be like, when we say shiny object, that's what I'm talking about. So with that in mind, on a scale of 1 to 10, are you chasing shiny objects? 10 is like, I am so spread thin because I see everything, every opportunity, and I'm going after all of them. And 1 is, I'm locked in, I'm focused, and this is what I'm doing. And I know exactly where I'm going and I'm not distracted at all. You can just drop that in the chat.
That's a really great question, Julie.
Thank you. That was, I typically do have like presentations with like slide decks and everything.
Jim said 11 for the last year.
I know. I'm loving these like real answers. It's like, yeah, some of you are focused and some of you are like, hey, I'd like to get more focused. So I'm actually going to put some people on the spot, and remember, you're going to be supporting each other. And let me just ask, hey, Dominic, you said you gave yourself a 3 on your focus level. Can you just share with us what that means to you? And I'd like to know also if you were ever closer to a 10 and if that came down to a 3. What's that experience been like?
Yeah, so I'm relatively new. I went all in on real estate investing realistically in January is when we started marketing. So it's kind of hard to get shiny object syndrome when you're just getting started. Prior to that, I would say for sure shiny object syndrome, trying to figure out what it is that I wanted to do. If I wanted to just dabble in real estate or just go, head in all in on it. So since then, I think I've done a okay job. I mean, right now I'm like 1 channel of marketing, going very heavy on direct mail, just finding off-market deals. The only thing I would say maybe why it's a 3 is whenever I get a deal, I start to try and analyze what all the possible like highest and best use is. And the hardest part is probably the best use, not just the highest. Like there might be a much higher profit margin, but being new, and if it's a larger rehab project that's going to take 6 months, versus like, hey, we know we can offload it right now. Why not just take the money and put it back into marketing?
I appreciate you. Thank you for letting me just like draw you into this. And what's really fascinating to me is that you're like, well, I'm new, so I'm not going to be distracted. Now, I will throw myself under the bus, and anyone can, self-identify if you would like, but I will say I had a different experience, and I'm super impressed that you've been able to be really focused, and diligent on that. When I got into multifamily, I was like, well, what about mobile home parks and RV parks? They provide residences. And oh my gosh, I started seeing all the different things that I could syndicate as opportunities. And I was so excited to like just be going after anything in real estate, even market wise. Well, I could go into that market. That's a great market. And that's a great market. And Dallas Fort Worth is awesome. And holy cow, Des Moines is awesome. And I'm just gonna say, Alex is nodding his head. I'm like, Kevin's nodding his head. I think some of you are like, yeah, this is so really being able to narrow it down is powerful. And so I want you to know, Dominic's on the phone now, but maybe he'll catch the recording, is that that's a real gift when we're able to like really just stay focused from the very get-go. So the question might be then, is it how do we get that type of focus? How do we offload the shiny object syndrome so that we can get the focus? Because in all reality, if we're going for everything, then we are going for nothing and we will get 0 traction. So I'm gonna ask Alex real fast what your biggest challenge is. And I'm pulling you in because you were nodding and I think you were in agreement. And I want to ask you, what was your biggest challenge, or what has your biggest challenge been with shiny object syndrome?
My biggest thing has been like you see the success that other investors and friends are having with different channels of marketing or even different assets of that there are, right? Commercial, single family. then, you know, I got a really good deal from direct mail, and I would start doing direct mail, and then I'd get a good lead from cold calling. I'm like, well, we need 4 more cold callers. Let's do that. And then they all start drying up sometimes for me. And it's a matter of having a good CRM and making sure that you're following up with things from the past. But my thing has always been like, all right, if I'm kind of slow now, and if I see a friend that got a deal from a particular marketing channel or particular market, then I'm like, all right, well, off we go, let's do it. So it hasn't, you know, I've gotten some deals that way, but it's like throwing stuff against the wall hoping it'll stick. It's not good.
Oh, geez. Okay. I'm putting in the chat right now that I'm a 10 on agreeing with you that I went down that path. If you want to just, you know, throw yourself in the pool with us and let us know if you can relate to Alex at all, just let us know that, like, yeah, like a 12. Yeah. I mean, it's such a natural thing to be, you know, drawn towards other people's successes. And I will say, early on in my investing, and my husband recently reminded me of this, and he's been great about this over the years. But I was so caught up in a similar line of thinking, Alex, and I felt everybody else is going ahead. Everybody else is like, oh my gosh, they're on Clubhouse now. I got to be on Clubhouse. Oh, what is even Clubhouse doing now? I don't know, guys. Sorry, I won't get distracted with that. No shiny object right now. But you know, we start looking at other people's success, and we see that as, oh, that just happened, and we don't see the discipline over time, the consistency, kind of like what Dominic was saying that he's doing. Like, no, I'm being consistent, I'm being diligent, and this is what we're doing, having that clear process. So as I didn't close my first multifamily deal for a year and a half, and it was the most painful year and a half of my life because all I wanted to do, law of the first deal. If you just close your first deal, everything else is going to come and everything else is going to follow. And it was, you know, really being clear, am I having shiny object syndrome or not? Really looking back, and I hope this is encouraging for those of you who are in a similar position where you're like, I want my success now, I'm not willing to compromise. So I'd be evaluating opportunities and partnerships and deals, and it would be like, I like all this and this and this, but this isn't going to be the best. Not going to be the best. Not going to be the best. And I waited. Meanwhile, some people in my mastermind they just seem to be blasting ahead, and we're closing deal. And I'm like, I would just ask my husband, like, what's wrong with me? Like, why am I not closing these deals? I'm going to be very, I'm not speaking any names or any places or anything like this. So I can say this with knowing that I'm not throwing anybody under the bus, but I can look back now. Every one of those deals I said no to are not doing well today. So that discipline to know at least my investing thesis and to say, I won't compromise on my underwriting. I won't compromise on the type of communication I need with my partners. I knew some bare basics that I would not compromise on, and that created this foundation. And it's unfortunate that those deals are struggling and some of them are having capital calls now. That is unfortunate, but it is that cautionary tale to say, when you are grounded, you are going to go further. You're going to go with a lot more stability and sleeping at night with a lot of peace. So I'm wondering, for everyone here, I want you to think for a moment, and this doesn't have to be, we're investing in a lot of different capacities here. And so when you think about your investing, I want you to think about what is the number one thing that is distracting you, and then think about, what would the foundation be for that? What is a commitment that you're like, I'm going to commit, and this is something I'm not going to relent on. And I'm going to ask you to put that down in the chat box. Or if you want, you can unmute yourself and say it aloud to the group.
Yeah, I'll share for me. You know, it was kind of what Alex was mentioning. It was kind of, you know, comparing what other people are doing. And I had to get to the point where I don't have any social media apps on my phone. I don't use social media for personal use at all. The only thing I use it for, like REsimpli Facebook group, and I have it bookmarked. So I just come directly to it and just exit out as soon as I'm done. Because when you're looking at someone else's success, you don't know the real story. Like they might have spent $120,000 to get a house that's worth $130,000, but you only see $130,000 house. You don't know what else is going on behind the scene. So for me, it was the discipline of not even get temptation, just completely avoid it, ignore it, and just take it out of, like, I even have a paid app on my phone that blocks certain websites, so I don't get like sucked into, like, for example, hey, you just can check the score really quick, like ESPN. It's just like really, really small things, but you just go down this rabbit hole. So yeah, that was like the biggest challenge that I personally struggle with, is to just stay away, like not even let that temptation come into my life. That's a daily struggle for me, honestly.
I appreciate that, your transparency with that, because the comparison syndrome can be so fierce on us. And although we would want to have the strength to cheer people on, it's sometimes like it's just painful and it stings. I'll admit, like there are times I was in tears, and my husband would remind me, what, to your point, are they cash flowing? Do you know what the numbers are? Are their principles your principles? So for us, it's like, hey, we have very firm principles on which we're investing. And I don't care if it's a 4-unit or a 400-unit, is it going to cash flow? That's really critical for us, right? So it's like knowing what is actually super important for you. I'd like to see some more people, or, drop in. What is the number one criteria for you on your investments? Kind of like your do or die, like, no, if it doesn't meet this, I'm not going to do it. I'm not moving forward.
Yeah, for us, it's 1 to 4 unit that cash flows.
Yep, the cash flows. I like Brianna has a win-win for us and the seller and the buyer. That is the foundation that the first 2 generations, my grandpa and my dad, taught me. They're like, everybody should be winning in the deal. I really appreciate that. That's good business practices, and it will build a very strong empire. Anyone else? We got a cup. We've got time. Don't be shy with your number one. Yes, buy at the right price. And flipping right now, this is an interesting time to be flipping. I've been going outside my buy criteria, but with owner financing deals, but feel limited on the exits. Yeah, so then knowing, like, when do I stretch? When am I willing to have that shiny object syndrome with my buy criteria? So like knowing these are things that I can live with, and these are non-negotiables. I'm not going to do anything with this. This is really, really critical when we're talking about getting traction in our businesses and in our investing. So one of the elements, I'm just going to shift this a little bit, is that it's really healthy to have some level initially of where, okay, I can look at the spectrum and see what's out there. Is that's really important for us to be able to have, because we don't know everything. And so we have to have our explore and educational period. I did this, and I was telling Sharad on our first meeting that we had, I'm like, so I wanted passive investments. I just wanted cash flow coming into me. And I was going to achieve that through real estate investing. And then I got shiny object syndrome. And I was like, oh my gosh, there's Forex trading out there. Oh my gosh, I could have, my e-com store. Oh my gosh, I could have multiple streams of passive income. Yeah, see, you guys are like, yeah. So let me just say, those things are no longer in my life at all. And the horror story, about this is, and the lesson learned, another cautionary tale, is that instead of simply focusing on my real estate investing completely and being as sold out as Dominic is, right? And just like, I know what I'm doing and this is what I'm going for. I was like, okay, passive income, multiple income streams. This is going to be great. I ended up having a Walmart store that got shut down with $126,000 leveraged on an American Express card. It was so incredibly stressful. That was supposed to be a passive investment that, somebody else is managing it, they're running it, and I'm just supposed to be a liaison basically, right? All this to say, I did not do my research. I did not do my homework. So I didn't educate myself. I looked at my options and all that to say, when you're chasing after too many things, you're not going to do any of those super well. I found myself with those, chasing after passive investing, and found myself, on the downside of 126,000. Unfortunately, God is so kind and good and merciful, and every payment was made. But when you have a $60,000, hey, you've got 60,000 due and Walmart's holding it hostage or something, like, you lose some sleep at night. But those type of experiences can also temper us as investors. And so I would never want to relive it, but I'm also glad I lived it, because I'm like, made me very more focused and also very cautious. I had gone into a partnership in order to have that business. So it created some real clear lines about partnerships and who and how I partner and what my expectations are with partners. So even when it comes to partnerships, we can have shiny object syndrome. We could go into the next meetup group and be like, oh, awesome, I'm going to go partner with David and I'm going to partner with Keith, and they seem like super cool people. And then next week you put a deal together. It's like, is that going to be the best practice? Shiny object syndromes with what we're investing in, but we can also have shiny object syndrome with who we are investing in.